Hey guys, welcome back for another episode of the Crypto Forecast. So it's been a while, guys. If you follow me on Twitter, maybe some of you know already that I have been very busy the past couple of weeks. I have been working on a new Universal Studios movie that they're shooting here in Thailand in my area. So I got the chance to work with them and I took it. Literally, I have been working almost every day from 5 a.m. in the morning until 6 or 7 p.m. In the afternoon. So I didn't have physical time to make YouTube videos, but we finally finished shooting yesterday. So let's go back to regular schedule and looking at the markets. Maybe I will make a little bit of a video vlog showing my experience there working with Universal for this movie. I'm not allowed to show a lot, especially spoilers, because that's in the contract, in the rules. I cannot share too much on social media or I can get in trouble. But I have some footage that I can edit it a little bit and show it. So let me know in the comments if you're interested. Many people hate it when I do video vlogs, but probably 50% of people like it. So I think it's worth it. If 50% of people want to see it, I think it's worth sharing it. So let me know in the comments. And yeah, for today, let's get into the charts. As usual, I'm going to be looking at the Bitcoin BTC versus USD very quick. So I made a video actually from the movie set the other day. I think it was less than 1 week ago when the price was hanging more or less at 8,800, which is the 50% Fibonacci retracement for this last bounce here, this 40% bounce here. So the price was more or less hanging at 8,800 at the 50% Fibonacci retracement. I said in that last video that I would expect the price to go down to the 61.8, which is at more or less 8,500, and from here I would have expected a bounce. Actually, this was forming a descending wedge. But this wedge has been absolutely ignored. I'll explain more now. So this was forming a descending wedge, which is generally a bullish pattern. So not only that, we were at the 61.8. So at the moment when the price finally made it to the 61.8, I would expect by probability this wedge to break in the upside because the price would bounce on the 61.8, and it was already very, very close from resistance of this wedge. However, the 61.8 didn't bounce the price immediately, and the price stayed hanging in here at 8,500 for 2 or 3 days while the volume continued to tighten. So I think it was yesterday or 2 days ago I shared this on my premium group in Telegram. This was November 17. Today is November 19, so this is from 2 days ago. I said a big move is coming probably in the next day or two. Volume and volatility are very tight. The 61.8 didn't bounce it immediately. So now it's been too long hanging at 8.55K. So at this point, it's anyone's guess if the move will be up or down. By the way, my bias is bullish, but 50-50 for this specific move if it actually moves. And the price was exactly here. You can see, guys, it was hanging for too long at 8,500 more or less. The volume continued to get more and more tight here, was very much non-existent. And like I said, if the 61.8, which is this red line here, if it didn't bounce the price yet, now it's been too long. Now it's anyone's guess if it'll break up or down. So now yesterday we had a little bit of a breakdown. However, guys, we still don't have volume. So usually when patterns break, whether they break support or resistance, you see a spike of volume at the moment of the break. If there's no volume, and in fact the volume continues to generally go down, tighten, it means this pattern is being ignored. That's why I'm gonna delete it. This descending wedge is not a wedge anymore. There's no target to be made here. You cannot guess where the price is going to go based on this pattern, because there was no volume at the moment of the break, which means the pattern was ignored. It's just not a pattern anymore. So that's what we had here, a little bit of a breakdown in price, but the volume continues to tighten. So this is just a normal and regular, downswing here, a retracement after this big bounce. In the short term, I don't have any targets, guys, because this pattern was ignored. The 61.8 was ignored. I'm going to delete the Fibonacci here. So I don't have any target for the immediate term, but for the long term, nothing really changes. We are still above $8,000 from the low at 3,000 almost 1 year ago. So we're clearly uptrending. I mean, we've been in this downswing from top at 14K more or less to bottom at 7.3. It's been exactly 4 months. Now, currently, we are still above this last low here, so it could be that this downswing of 4 months, it's finished, it's done. This was the bottom of the downswing here at 7,300, and we are currently in an upswing or a sideways market from here. Very likely, this was the bottom of the downswing. I mean, it was 4 months swinging down very, very slow. Compared to how fast and strong this went up, this upswing here, the downswing is weak. It's just channeling down. Downwards channels are bullish patterns, actually. The only thing is, of course, you never know how long it's going to go, for how long it's going to be channeling down. You never know where the end is going to be. You can kind of guess when you see it too oversold. But you never know. It can always go a little bit lower, or when it's going up, it can always go a little bit higher. And when it goes sideways, it can always go sideways for a little longer. You just never know exactly what it's going to be. But I mean, this is channeling down, which is generally bullish, especially because it's channeling down very, very slowly compared to when we go up. We go up very, very strongly. And you have the same example here in this pump. In 24 hours, it went up 40%, and now to go down, to retrace just below the 61.8, it took several days. Let's see how many. So 24 days, to retrace. So in 1 day, it went up all this much, and then it took 24 days to go down, a little bit more than halfway. But the point is, it didn't do a lower low here. So it's taking forever to go down, and when it goes up very, very strongly. So the general picture is still bullish. I don't care what people say, guys. Like I said before, guys, I was bearish the whole year, and I didn't care about these sharp bounces here. I didn't care about these sharp bounces. My bias was always bullish for the whole 2018, and my bias is still... sorry, did I say bullish? My bias was always bearish for the whole 2018, and my bias is still bullish for the whole 2019, regardless of some dumps here. I mean, we had this vertical dump, and quickly had a vertical pump here. So it doesn't concern me very much. We're still super high compared to the lows 1 year ago. So in the big picture, nothing changes. I don't have targets for the very short term, but the best strategy for me, at least what I am doing, is I'm just holding everything I have been acquiring. I'm holding it. I'm not selling unless I need the money to pay. Like I said, when we were somewhere here at 13 or 12,000, I said, I mean, if you have a big bill to pay, if you know you have a big bill coming up, use the crypto now, sell the crypto now to pay for your coming bills in the next few months. But other than that, if you don't need the money, I wouldn't be selling a bull market. So that's my view. I hope it makes sense. And guys, I'll see you very, very soon. Let me know in the comments if you want me to do a little bit of a vlog style video showing about this movie shooting that I've been working on here in Thailand. Other than that, thank you very much for watching, guys, and I'll see you very soon. Bye.